So I'm quickly just gonna go through the news first before we can start with the charts and stuff, because I think um, I mean, as you guys already know, that we always use Bloomberg. One of the main reasons is Bloomberg is specially made for I should say, traders and bankers. So Bloomberg mostly gives out the news that affects markets most of the time. So again, just an hour ago, there's a news that UK and Europe hit 50,000 death toll. That's not good outlook, because that just shows that there might be a more further lockdown in coming days, in coming after this lockdown, when this lockdown finishes for UK around by end of the November. We might see more lockdown that could continue till end of March, because they did increase the furlough till March. So there most likely could be another lockdown coming up by, they might end it in December, and they might end in November. So they let the December, go normal, so people can shop around for Christmas. And as soon as the December ends, they might put another restriction lockdown for about 2 to 3 days. So on that basis, we're clearly seeing, GP. That's why GP overall today was falling, because of this bad news that came out. They already knew that the case is that's gonna go top up about 50,000 today. That's why GP was falling after being really high early in the morning. Also, Biden and Trump, issues still going on. So Trump is still saying that he will be, going through his courts to challenge the elections, and that some of the courts have accepted his challenge, and they are saying that they'll be looking into it. So that's why market didn't really react to the election news that it usually does. I mean, I don't know if you guys have seen, but last 4 years ago, if I can just pull out, let's see if I can pull out a monthly chart here. This is GBP USD monthly, and when was the last time election happened? In 2015. So I think around this time there was about, usually there was a 300-400. This is a monthly chart, so every candle is about 300 to 400 pip movement. So you can see that market moved quite a lot last election compared to this election, where this election month, and you can see hardly any momentum compared to last election momentum. So that just shows that a lot of people were really interested in what's happening with the election. They knew that Biden was going to win. Everyone basically knew that Biden is going to win. So that's why market wasn't really moving much. But what was moving was stock market. Stock market was berserk during election times. If I just show you quickly what was happening with stock market, this was the stock market. Stock market, as the day that Biden won, stock market closed, opened at 30,115. This is all-time high for US 30. It's never been this high, and since then it's been rising. So that's the only market that moved. Forex market is still, more for coronavirus bound. There's still more into, what's happening with vaccine and what's happening with, virus. How the course country thinking about curbing the pandemic. As you know, about 2 days ago, the news came out that the vaccine company, I think it's called Pfizer or something like that, had a, what's it called? Infection drop rate about 90% in a patient, which was amazing. In 90% of the patients they tested, about tens of thousands of patients they tested around the world, about 72,000 I think patients they tested, they had shown about 70%, 90% results that they are getting better through this vaccine. So on that basis, we saw a massive drop on gold. So gold plummeted on that day, exactly this day, which was on 9th of November, about 2 days ago. This was the gold drop. It dropped nearly 120 points, which is about 1,000 plus pips. So what does this tell us in coming days? So this just tells us that gold is going to be really volatile, guys. So if a gold can drop 120 pips, it can rise 120 pips. So we could see gold going all the way as high as 1958. Literally by end of this year, gold could go back to levels of 2000. So we are expecting gold to be as high as 2065 by end of this year. We don't know what would happen, but it can happen, because, this vaccine that just came out, it says 90% result, but of course it needs to go a bit more trials before it can be finally proven. By 90% results is good, because UK is trying to roll out. So there are talks that UK might roll out vaccine by end of this month, as early as the end of this month. By 1st of December, we might be getting vaccine in a local NHS. So if that does happen, I'm quickly going to show GPSD what would happen with GPSD. If that does happen, GPSD will fly, guys. If that does happen, GPSD will fly, and it will fly really high. So let's go to monthly resistance. So right now, GPSD on monthly is testing a monthly 50 MA resistance. But if the vaccine comes out and it is proven to work, GP is going to fly, guys. It could go as high as 1.34 or even to highs of 1.42, which it was about 3 years ago. So we could see GP actually breaking, a multi-year resistance if the vaccine does work, and if the vaccine does come out before end of this year, because it'll be the first country that really comes out with a vaccine, and that will give investors lot of confidence around the world. And what will happen is they need to, of course, to buy stocks or to buy assets in any country, to buy the currency, and the currency will just shoot up. And that what will happen is Bank of England might look to increase the interest rates. And once that happens, that's going to give currency more boost, and we're going to see currency climbing even higher. So again, guys, keep in mind, if the vaccine does come out for, by end of December in Britain, GP is flying. GP could fly 300, 400, 500 pips in matter of weeks, months, guys. By end of December, we could see GP topping up the, breaking above this yearly high, which was first, I think the yearly high GP made was this year was, yep, yeah, the yearly high was this, that he made on, let me just see. Yeah, 31st of Jan, the yearly high was 1.32, so it could break that yearly high. It's already broken, sorry. It could break the yearly high of 1.3480, by end of this year, if the vaccine does come out. If the vaccine doesn't come out, then GP is most likely going to linger around, fall back to lows of 1.31113, or even as low as 1.3069, because the coronavirus cases will be rising. There'll be more deaths. That's going to put off investors from investing, in Britain, and that's going to stop pulling money from GP, and they start pushing more money into assets like gold and silver and US dollar, most likely. So that's the case around the world. So for example, Biden, he's thinking of a new lockdown. So what will happen if the Biden does go through a lockdown? So we can look at DXY. So DXY is currently, as I mentioned earlier, daily watch list in the morning when I sent it. DXY will test this 50 EMA resistance and will drop, and that's what's happening right now. After testing a 50 EMA, 50 level of Fibonacci. This level 50 of Fibonacci is dropping. So I don't expect it to keep dropping. I still think that DXY is still a very strong uptrend, because Biden policies in a short term is very good. If you're looking to invest in US for short term, his policies are really good, because the policy he's bringing, the corporate tax and stuff, for short term is really good. So what happens is, most likely investors will be pulling out all their assets, all their money from stocks, and will be pushing their money into safe haven currency, which is dollar and JPY. So that's why so that's why we did see US dollar rising the day that Biden won. This was the US dollar that day, and US dollar still looks very strong. It could see again. I do expect US dollar to close the week as high as 193.46. In about 2 days, I do expect US dollar to reach 93.46. So again, that's the closest we might see US dollar coming up to highs. And if Biden does announce, well, most likely he can't announce anything before he becomes a president. That's going to be in January. So before that, he has literally no power in his hand. So we might see US dollar dropping before that, but overall in the short term, I do think US dollars is quite strong. I do think US dollar is going to keep rising, which will in terms give pairs such as USD more downward momentum. So I could see USD dropping back to lows of 1.1622, which is about 100 pips, 110, 120 pips. So I do expect USD to drop 120 pips by end of this year. I do not expect Euro USD to be really climbing any higher than this, because Euro overall, again, coronavirus is quite high in Europe right now, one of the highest, around the world. If that continues, then Euro might, they're being talked about, they might decrease interest rate even lower. So they might slash it even lower. You must have heard earlier today, Lagarde, the ECB president, was speaking, and she was saying that they might use all the tools they have to help the economy, and that one of the tools they always go towards is decreasing interest rate. And when that happens, you guys already know that when interest rate get decreased in any currency, that currency drops because it loses value. Because what happens is people start pulling their money out from banks, the safe deposits they have, and they start investing in assets and back into economy. Basically, that's why there's a decrease of interest rate. And when they increase interest rate, people start depositing money in the bank, and that increases the value because they want interest, of course. So guys, thank you so much, for understanding, for joining me today. Again, if you have any questions about this market or anything about US elections or any particular chart that you're interested in, you can let me know, and I'll be more than happy to help you out. Forgot one thing, RSI strategies. I'm going to pull out RSI. I personally don't use RSI that much. I use MACD, but we're going to talk about RSI quickly. So RSI is basically a simple strategy, guys. Let's get rid of this MACD quickly, and I'm going to rid of this EMA. So I'm going to explain use RSI. So RSI basically has two main strategies, overbought and oversold zone. There's only two zones RSI has, and that's the two zone that we usually look at to enter the market. So overbought zone, you know, the clues in its name. When something's overbought, it drops, and when something oversold, it goes up. So what happens is basically usually oversold and overbought zone at 70. 70 will be overbought zone and 30 will be oversold zone. So any line above this 70 would be considered overbought. So would be considered that is the value of the asset is more than it should be. So for example, if GBP, for example, today on 21st October, USD was at if I just go here 1.1877, and it was clearly overbought because, you know, investors were thinking it's too expensive, USD should not be that high, and we can see it dropped from there. And on 29th October, USD was around a low of 1.1658, and what happened is investor thought, okay, this is too low, we do not expect USD to be that low, and it went up again on 2nd of November when USD was 1.169. Again, investors thought it's too low and they moved up. So that's how you can use RSI. Of course, RSI, you can't just use it, you know, in just by looking at overbought and oversold. If you're going to do that, most likely you're going to be wrong. So we use a Fibonacci. So you can draw a Fibonacci, and you see that when Fibonacci resistant, so you can see that Fibonacci resistance of 100 and Fibonacci support of 0 here. So if you draw a downtrend Fibonacci, which I've drawn here right now, we can see that, you know, price, you know, this is a resistance, so price hasn't broken above this level and price hasn't broken below this level. So if you get overbought zone at a strong resistance of Fibonacci of 100%, that means is a good chance that price will drop from here. And if you get Fibonacci 0% support level and you see an oversold zone, is a good chance that price will go up. And that's how you use you know, RSI in, you know, in conjunction or in a partnership with other technical analysis, such as, you know, support resistance, trend line, trend channel, or Fibonacci, guys. So this is the basic of RSI strategy. Of course, this is really small. Let me just go to a different chart and, you know, see how. Okay, let me zoom in. Go to short time frame. So again, right now can't see any overbought or oversold zone, because as long as price is between the range, you can't really enter the market straight away. So oversold zone, we didn't see any oversold zone. Our basic rule is price has to go above this. We do not enter the market if the price is in between this area, you know. Even the price touches it, I do not want to enter the market. I want price to go above the market, then is 100%, you know, overbought or oversold zone. So over here, for example, on 10th of November, which was yesterday, price was here. So sometimes, see, you can get caught out. So for example, see, if somebody entered a sell here, what would have happened is it would have gone caught out. It would have been probably hit a sell for him. And again, if you entered, and then this would have been a bear entry, right? Why is that? Because if I just zoom out, okay, so I can't really see anything here. So sometimes that's what happens, guys. You cannot enter, you know, some trades on a short-term basis, on a short time frame. Sometimes you have to go to a longer time frame and you know, check how the chart has been moving. So sometimes what happens is you have to draw a support resistance on a longer time frame compared to short time frame. So I'm going to draw my resistance here, and let's go to 15-minute time frame again. So this was the Fibonacci here. So again, price is above it. I'm going to go again because I do not see any resistance. So I'm going to draw my resistance here because I know the price hasn't broken above this level as of yet. So again, so that's it. There you go, guys. So again, so this was one of the highs. This was the high that we, you know, thought that price could go above, but it didn't. It broke above, but it wasn't at a very strong resistance. So you can clearly see the price was above the gray zone. So it was hitting the overbought zone, but it wasn't hitting the resistance. Did you get what I'm trying to say? Was above, so there's no confirmation yet. So okay, you got one confirmation overbought zone, but you don't have a second confirmation that is not really touching a resistance. So that should not be ending the trade. Then again, when the price does reach the resistance, so this is the resistance here, and you can clearly see the price was again overbought, and this would have been a bear trade to enter because your risk to reward would have been so low, because your risk would have been, let's say if you enter the market here, okay, so you enter the market on this candle closed and you enter the market here. So your entry was 1.3267. Your stop loss would have been less than 20 pips, and you could TP could have been, you know, about 20-30 pips. You could TP could have been all the way here, but you know what you could have done, you could have just closed half of your position here and let the other trade run, and whatever happened, it would probably would have had your entry and trade would have been closed. So that's how you can use RSI, guys. Always remember, RSI is best used in between using support resistance. So if you're using support resistance, RSI will really help you. If you're using RSI on its own, you're most likely going to lose most of the trades, because if you enter here as a sell trade, it would have been caught straight away. you know. But if you entered a sell trade here, because you know it was testing a strong resistance, you would have actually made some profits. So, all right, guys, thank you so much for joining. That'll be it for today's Zoom calls. Of course, we do the Zoom call regularly. So if you are interested in it and if you're enjoying it, please do let me know so we can do more and more of this every day. Thank you so much, guys. Thank you so much.